Hello, everyone. This is Kaan from Hackquarters, and this is our new episode of the new normal. And today's guest is Scott. Scott is with us from WeWork Labs in Fintech, and he's in London as well. And it was a really rainy day, but now it's a perfect sunlight outside. So I'm going to make that online video session count because I'm sure that he can go outside and have fun. So welcome, Scott, and how are you? And would you like to talk a little bit about yourself so people who haven't met with you will know who Scott is?
For sure. Yeah. Thanks everyone for joining. Thanks for having me. Really excited to speak to you. So yeah, a bit about myself. I did a startup about 10 years ago, sold that 2.5 years later. That was in the consumer and IoT space. So essentially a mobile application that was using iBeacon technology to help engage customers to purchase more items in store. I then started a digital consultancy called Digital London, which is still running today. Work with some really great people and partners like Techstars, Barclays, Radboud University in the Netherlands. Was one of the earliest partners for running Google Glass in London. So I was one of those weird people that were running around and walking on the tube with Google Glass on my face. And then actually got into cryptocurrency in 2014 through a mentor of mine. So have a really big focus on having like mentors and people that you inspire to be around you. And he got me into crypto or told me about a project called Ethereum prior to it actually launching its token publicly. And then on from there, I was director of global business development for a protocol project called OneChain, a blockchain company based in Asia. And so worked with them in London running the team here and also in Austin, Texas. And then had the opportunity to work with some of the Binance Labs companies, again, cryptocurrency in San Francisco. And then started with WeWork about just under a year ago now, heading up their fintech and blockchain focused labs, which I can tell you a bit about labs if that would be helpful.
Yeah, I mean, because the reason is we can actually talk for hours for different stuff, even like from retail tech to cryptocurrencies, because we have a lot of things to talk in common. But maybe in starting, I'm sure that everybody knows about WeWork, and maybe few people doesn't know about WeWork Labs. So I was one of the lucky persons that visited few of the labs over there, and you hosted us in London. So I like it very much. So would you like to start? What do you guys do as WeWork Labs?
Sure. So WeWork Labs can essentially be seen as WeWork's incubator. So we support early stage companies through many different initiatives. So for example, they have access to Labs Portal, which is a bespoke portal of content, articles, video workshops, etc. Also discounts and perks from different providers like Amazon, Google, HubSpot, etc. And then what we do is we convert a physical space in a WeWork building, and then we turn that into a like open area of community and collaboration. So that's where each company has a batch of dedicated desks, or if you're a solo founder, a dedicated desk. You're surrounded by other, in my case, fintech and blockchain startups. And then we bring in mentors to have and help the startups through workshops, office hours. We bring in external partners that run events, etc. So basically, like packaged together, all these things essentially help the startups grow and continue to build, fundraise, etc.
I mean, you are all involved with fintech even before everything happened with WeWork Labs. So, and I think WeWork Labs have different verticals. Sometimes they are generalist programs, but in London you have fintech program. So maybe we can talk about a little bit about fintech because UK is so hot on fintech anyways. And you are one of the persons who is also really interested in that. Do you think that with this all corona status happening all around the world, because now everybody is accepting, of course, like card payments, and most of the places even doesn't accept cash. This was like a strategy for London anyways. They were planning to decrease cash usage because of the theft and so much connected to it. So what do you see? Do you think that fintech innovation accelerated during this period? I mean, we don't need to just talk about like Corona, but for later days, what do you see in this space with startups?
Yeah, sure. That's a great question. I think like, well, COVID, for example, I think it's definitely had a huge impact on retail businesses. You've seen like the major adoption coming from like online shopping, and even those merchants have been affected in themselves. I think like the ability for these new like payment methods and the ability to actually purchase wherever you are. I think the form of what's coming in with banks and neobanks and challenger banks, making it far more accessible for people to actually save and spend efficiently is really interesting. And then you look at like new technologies around blockchain and decentralized finance, which is like completely removing the legacy banking systems in between that in itself. So I mean, like London is like a haven for fintech, as I'm sure most of us are aware on this call. I think the stats are like European fintechs exited like a total of 83 billion like since 2013, and UK has the highest amount of fintech investment in like the second largest city outside of San Francisco. So I think it's like a really interesting perspective from there.
I think also like consumer wise, the adoption is massive as well. Like everybody uses a challenger bank for sure, like Revolut, Monzo, like even businesses, and everywhere with the Apple Pay, with the convenience of like mobile payment and wearable payments, I think we see a lot of changes. So when we do the programs as well, we see certain trends. So what do you see in fintech, for example, when you call for startups? What type of startups pop up right now? Is it, I mean, challenger banks are kind of being legacy right now because it's been there for like 5-6 years. So there are new opportunities, I'm sure. So do you have any kind of patterns that you see in the applications of new startups coming up with the similar ideas in the domains of what do you have?
Yeah, I think you're right. I think it's definitely developed over time. So like London, UK is always, we've been like exceptionally dominant in open banking, for example. So essentially a collection of banks have come together, they've opened up their backend infrastructure, and they've enabled smaller companies, startups, to have access to that system. And what that's enabled is, I think that's really where you've seen the growth of the first challenger banks, for example, Monzo, Revolut, Starling Bank. What we're seeing now is this trend more towards open finance. And that's really where it's not only opening sort of banking infrastructure, but it's now heading towards like mortgages and insurance and many different like industry sectors that are cumbersome by financial services. So we're definitely seeing more startups just in fintech, but more in a generalized space, not just payments, not just banking. There's a company called Finanum in Labs. They are essentially helping you save for your first home. So they built a really bespoke and intuitive platform for you to basically manage all your savings, how much cash you make from your salary, what proportion of that to save for your first home, etc. There's another great example called Bipit. They are basically offering you the ability to have a very low cost financial advisor at your disposal through a messaging system. And I think those things are really interesting where, like, for example, having a financial advisor, you need like at least £50,000 in £50,000, sorry, in savings just to have access to that type of service. And then the fees on that would be huge. So if someone actually needs that help of how to save their money and how to invest it properly, you now have that ability to have that.
We see a lot of startups like democratizing the industries they've been. So as you mentioned, a lot of startups are coming with like low costs. So they do have accesses to like consultants, saving accounts, and any kind of direction in their life, which is really, really great. So the game is being more equal for every individual, so that some people are not skewed and lucky and the others are not left behind. So for the people who are listening to right now in the live session, you can always ask questions on the Q&A. Maybe if we will have some time, we will be happy to discuss. And I will also ask you like few questions. So now we had this like 3 months period where we lived really differently because of the quarantine. We've been working at homes, which you are also at home, which I also enjoy. I mean, I'm not going to lie. So it's not that the worst thing that happened. I mean, I'm missing a lot of stuff for sure, but it was something that we never thought that it would be okay to do it. So now I'm also getting a little bit used to it. So what I'm going to ask you is, since we're living like a different life than we used to, do you have anything in your life you would like to keep, even if you go back to the workspaces that we have and go for office buildings?
Yeah, it sounds kind of cliche, but I've actually really, so I live in central London and I live with my girlfriend, and actually having the ability to actually work next to her. So our offices, our desk and our laptop is pretty much next to each other all day. That's actually been really refreshing. I really thought like week 2, we were going to be strangling each other, or at least her strangling me. And that hasn't been the case. I think it's when you're very like driven and passionate about what you're working on, and have the ability to kind of like bounce ideas and on with someone that you trust. It's been really refreshing to actually work with her for such a long period of time.
And I think commute was the biggest issue that we all have, I guess, right?
Yeah.
Stress a lot of time. So we used to have more podcasts in our life, but still, I think still low commute is much better. So I will also ask you a few questions, again, on the fintech domain in terms of like incubator, accelerator point of view, because fintech is generally more, people are generally a little bit afraid of fintech because you need more money to raise in order to have a like certified banking. Because when we used to talk about fintech, it was always like challenger banks, consumer financing, etc., etc. So do you think that is it easy to establish a good fintech company with low resources, let's say?
So I think it's contextual. I think it depends what domain you're really going down. If you look at how, like, let's use Monzo, for example, how they first started, they really started as being a money management service. So they had an amazing user interface and user experience that enabled you to see all the payments that came in, all the payments that came out, and be able to see exactly what transactions you're making. And that was that. And they were able to do that just through an e-money banking license. So they didn't have to go down the complex route of actually going through complex regulation to actually obtain a full banking license. And I think what we're seeing now is it's actually getting a lot easier to actually be a fintech startup, or just in general offer financial services. And I mean, I actually have so one of the topics, so we actually just had our startup showcase event where essentially there was 119 startups that pitched in front of around 150 investors over 2 days. And I think the stats were around like 15 of those out of the 119 were fintech companies. And what I actually believe is that's going to be closer to, I don't know, probably like 100 in the years to come. I think reason is it's becoming a far simpler for any company, not just a fintech startup, to offer financial services. We think about like, and the reason why mainly is because like infrastructure as a service, as a product. If you think about like banking layers, it used to be very, very complex. You had regulatory, you had fraud prevention, compliance, API integration, like payment on and off ramps, all these different aspects that you had to look at and go through before you could really even like launch the product. And I think now you have solutions like, I don't know, Plaid, for example. They make it like super seamless to actually connect using one API to all these different merchants and services and things. And before that would have taken, I don't know, years of different phone calls and negotiations and things. And I think what we're seeing now is just like 15 years ago, 20 years ago, it was actually quite difficult to be a software company. Mm-hmm. So now we have we basically have AWS, where all you need is a laptop and a credit card and AWS, and you can actually launch any software company that you want. And that same thing is coming to fintech.
Most of the functions that we were really trying to get into our company are kind of like commodified another startup right now. So we introduced you one of the startups that we had in anti-money laundering. So they are just providing that as a SaaS model like AWS. And even with the like credit scoring, access to money, all of those are kind of becoming more and more functions of different startups, which is really distributed. But if we have a perfect infrastructure and open banking, it's always key. So when you go into like the challenger bank, then you can see another fintech offering you something new. So it's really, really cool. I really enjoy that. I'm just looking for any questions which we might have, but I think everything is quite clear. So what I'm going to ask you finally is, so WeWork Labs is kind of open for everyone. So even if they are not in London, so would you like to talk a little bit about if people are interested, how they connect with you in a way, or how they can connect with WeWork Labs in general?
Yeah, sure. So we have our program where it's physically in a location, which is our core labs offering. That is a non-equity taking program. So we don't take any equity in your company. You pay for the physical desk space, and then all of the additional services that I described earlier, they're at no extra cost.
Mm-hmm.
What we launched just before COVID, coincidentally, is our community membership. And that's where you can be anywhere in the world. You can be in a WeWork, you can be in another office space, or you can just be working from home or anywhere. And what that means is you get access to all of the virtual resources that we offer. So pretty much every day there's on average across our 86 labs locations, each of the labs managers there are putting on different workshops that are recorded over Zoom, etc. So there's about 15 to 20 workshops every day that you can basically stream into live. And then you get all the additional plus services like the discounts and perks and all the online content.
And also like founders meeting each other is also, as far as I see, is a perfect perk for people because it's quite tough. So you need founders backing you in like a circle so you can share problems because they have the similar point of view. So we will add this information in the YouTube and Instagram links as well. So we also have one question. So Sabina is asking you one question. What do you think what do you think are fintech's unique advantages and skills and how they might innovate to recover? I think she's asking for especially kind of legacy fintech companies because the new ones are coming. But what do you think in fintech space, what is the most important skill to recover after this crisis?
Yeah, I think so. Just in general, where fintech companies have a massive advantage over, I guess, other industry sectors is the core proposition that a lot of non-fintech companies are going to want to offer financial services in the future. Like, let's take an example like Uber. So Uber, they are not in fintech. They're a taxi, they're a ride-hailing company, right? So they make the majority of their money from the margin between what they pay the drivers and what they charge riders. And so what if they could look at, but also on that, they have the most granular data about their customers. So for a driver's perspective, they know exactly what car they drive. They know exactly how many drives they're making. They know exactly how good they are at driving through customer ratings. And ultimately, they know how much money they're making per month. So what if they could actually drive more margin by offering like car insurance to their drivers? They're like in the most direct value impact, and they know the most granular detail about their drivers. So, I mean, I think it's really coming where a lot of these non-fintech companies are going to start offering financial services. And like your example of the fraud prevention startup that are offering that as a service layer, that's a really, really strong proposition for a lot of companies that are not in fintech but coming into the fintech space.
Yeah. I mean, thank you very much. I really enjoyed every minute of it. So we will keep discussing anyways. And as I mentioned, I really want to keep it brief. And I think it's clear to everyone. I hope they will check WeWork Labs and also your profile as well. If they want to connect, and if they can't, they can always reach to us and we can discuss. Thank you, Scott. Have a great day. We still have the sun outside. Maybe you can take a stroll before it gets too dark. Thank you very much.
Brilliant. Thanks, Khan. Really enjoyed it. Thanks everyone for joining.
Bye-bye.
Bye.